Hello everyone. I welcome you all to the Q2 H1 results presentation series. I'm Jaikishin Godwani, based in Dubai for more than 25 years, and it's been a privilege to be a part of the Profit From It family. I met Piyush Sirji a couple of years back when I attended his training in Mumbai, and it was an absolute eye-opener for me because he taught me the formula how to create wealth. And the formula is very, very simple. Quality plus growth is equal to a wealth creator. And today, in today's presentation, we'll look at a wealth creator company, Asian Paints, and we'll try to put this quality and growth parameters and try to ascertain if the future potential growth is still there in Asian Paints. So let's start. If we look at Asian Paints at a glance, Asian Paints is the #1 paint company in India, having over 2.8 billion of revenues. It's 3 times bigger than its closest competitor. 3rd largest paint company in Asia, 9th largest worldwide. Operations in 15 countries, 26 paint manufacturing plants, 50 years of market leadership in India, 7,500 plus employees, and servicing customers in over 60 countries, part of the NSE 50 and the BSE 30. This is Asian Paints for you at a glance. Now, if these are the top paint companies in the world, and if you see Asian Paints is the 9th, which is marked in red over here. Now, there is a question or an apprehension in the minds of a lot of investors that Asian Paints has been there since 1942. And is this industry still growing, and can we still create wealth in this industry? So if I look at the per capita consumption of paint and coatings worldwide, India is relatively in the lower end of the bracket, consuming almost 4.1 kgs per capita. Whereas developed nations in the Asia Pacific region, the average per capita consumption is 9.7 kgs. So there is still growth in this industry left. Further, if we see that in 2019, the total paint industry was 545 billion rupees, which is 54,500 crores. Now, this comprises of the organized sector, which is 67%. By organized sector, I mean all the companies which are listed in our stock exchange or yet to be listed. And if you see a fair share, around 33%, is in the unorganized sector. So from here, you can ascertain that this organized sector is chipping in and trying to grab the market share from the unorganized sector. And if we look at value terms, in 2019, as I mentioned, the total paint industry was 545 billion. It is expected to grow to 971 billion. So it will grow at 12.2 CAGR. Now, Asian Paints, most of their revenue comes from the decorative paints, which if you see in 2019 was 403 billion, and it's expected to grow at 13% CAGR to 743 billion. So if the industry itself is growing at 13% CAGR, we expect the leader to definitely grow, and there is still potential for this leader to grow and create wealth. Now, if we do a deep analysis of the listed companies in our stock market, Asian Paints belongs to the furniture, furnishing and paints industry, which comprises of 24 companies which are listed at the moment, having a total market cap of 4.6 lakh crores. Now, in this industry, there are also, mostly it is dominated by the paint companies. As you can see, out of 4.6 lakh crores, 2.86 lakh crores is just Asian Paints, which is 63.2%. However, besides the paint companies, there are other good companies like Kajaria Ceramics from the ceramic sector, and it's a leader. Sheila Foam from the mattress sector. But if we were to look at purely only paint companies, then there are only 6 listed paint companies in the market today, having a total market cap of 4.1 lakh crores. Again, if we see, Asian Paints dominates it and has almost 70% market share with 2.86 lakh crores, followed by Berger Paint, almost 72,000 crores. So if you look at the closest competitor, which is Berger Paints, Asian Paints is 3 times bigger than its closest competitor as per market cap. In terms of sales, if we look at, again, Asian Paints, out of the total paint industry sales of 37,000 crores as of March 21, Asian Paints is doing 21,700 crores, which is 58.6%. The closest competitor, Berger Paints, is doing 6,800 crores. So again, over here also, Asian Paints, in terms of revenue, is more than 3 times larger than its closest competitor. We go further and look at net profit. Again, we see that the total net profit generated by the paint industry of the listed companies is 4,600 crores. Asian Paints is generating 3,139 crores, which is 67.2%. And again, it is more than 3x of its closest competitor. So in terms of revenue, in terms of profits, Asian Paints is absolutely dominant. Further, if we look at the margins, Asian Paints has a margin of 46.5% almost, whereas the industry average is 6.2%. And if we look at the next quality parameter, which is interest coverage ratio, this essentially is the debt paying capacity of a company. And here also, the industry average is around 32, whereas Asian Paints has 56 times more to finance its or to pay its interest. And a point to note over here is Shalimar Paint might be in some problem because their interest coverage ratio is extremely low, and we need to be careful about this company. Further, if we look at the return on paid up equity, this is basically for every 1 rupee which the original stakeholders had invested in Asian Paints, they are today taking home 33 times more than what they had invested earlier, whereas the industry average is around 8.6. So in all the 5 quality parameters, Asian Paints is the number 1 and the dominant player and outclasses its other competitors. Now, if we combine this quality with growth, then we get our wealth creator. Now, when we look at the growth, that is the 10-year CAGR growth in sales and profit, we see Indigo Paints has the highest sales and profit growth. But we need to understand that Indigo is starting off from a very low base. And if we look at Asian Paints over the last 10 years has grown by 11% CAGR, its sales, and 14% its profit. Now, why is Asian Paints such a dominant player in its industry and an absolute leader? To understand this, we need to look at this and the following slide, and this will give us an idea as to why they are so dominant. Like if we look at the pan-India dealership network of these paint companies, Asian Paints has 70,000 dealers in India, while their next best competitor, which is Berger Paints, has 30,000. In case of operational efficiency, if you see the inventory days, that means how long does it take for any company to turn its inventory around. You see Asian Paints takes 6 to 10 days, which on an average is just 8 days. The nearest competitors take double this amount. Now for paint, we need to realize that paint is stored in containers which have got huge volume. So, and paint is the only product which is sold at MRP and goes directly from the factory to the dealer and from there to the consumer. So for the dealer, the faster the churn happens, the better it is. And since Asian Paints can turn the inventory around in 8 days, while the nearest competitor can do it at 16 days, Asian Paints gets away with paying lower incentive to the dealers. And the dealers also accept the lower incentives because the inventory turnover is faster. So essentially, Asian Paints is taking home 95 to 97% of the MRP back home, while their other competitors are much lesser. Further, if we look at the supply schedules, Asian Paints can deliver within 4 to 6 hours after placing the order, which means in a day they can deliver to their dealers 4 times in a day, whereas their competitors can do it at best 2 times a day. So now, if we look at Asian Paints dealers, there are 70,000 dealers. 4 times a day if they do delivery, that is 280,000 times in a day they can deliver and replenish the paint orders. The nearest competitor, which is Berger Paint, can do it 2 times in a day, 30,000 dealers. That's 60,000 times they can replenish. So 60,000 versus 280,000, absolutely no comparison. And if you understand this, you understand why Asian Paints is so dominant and why they are dominating this paint industry. Further, since we are able to establish that Asian Paints is an absolute leader in this industry, we can dive deep and look at Asian Paints' behavior and their past history. So Asian Paints, in terms of revenue, they were doing in 2002, 1,466 crores of sales, which has grown to 21,700 crores. This is 15x growth at 15% CAGR. And if you see year on year, their revenues has increased. This is called consistency. If we look at their profits, from 106 crores in 2002, their profits have grown to more than 3,139 crores in 2021, and that too at a very healthy margin. This is 30x growth at 20% CAGR. And again, you can see the consistency, except one dip in 2009. Every year, their profits have grown year over year. And what does this mean? Their reserves has also grown, which has helped create huge shareholder wealth. So in 2002, their reserves were 343 crores. This has grown to 12,700 crores. And what is phenomenal about this is, in spite of their reserves growing, their return on equity has been on an average more than close to 30% on an average, which is just phenomenal. And that is why there's been such a huge wealth creation in this company. So a simple investment of 1 lakh in 2002 is worth today 1 crore 31 lakhs, which is 131 times. Now, if we look at the business segmental revenues, most of the revenues come from decorative paints, which is sold in India, which is 84%. The international business is contributing almost 12%. If we look at their shareholding pattern, the promoters hold 53%, FFIs 21, mutual funds and domestic institutional 7, and retail 19%. Their major costs. Now, this is a very important slide where if we look at their raw materials, raw material share is almost 71% in its cost. And the raw materials are normally petroleum based. And as you are aware, in the last quarter, the crude oil prices have spiked up. So you can see a huge spike in their raw material cost, which is 73% compared to last year. And this spike is impacting their profitability. Further, it's been a double whammy for Asian Paints because, as we know, logistically, they are one of the most efficient players, and transportation cost has gone up because the petrol prices are now more than 100 rupees in India. So their other expenses has also gone up by 53%. So both these combined has had an impact on the bottom line. Now, if we look at the trend and try to see how their sales have grown over a period of 1 year or so, what we see is last year from April to December, there was COVID impact and the sales were down by 3%. However, the profits were up by 2%. This was primarily because during this time, the oil prices were relatively low. And they ended the year with 7% growth in sales and 16% growth in profits. The first quarter, we see a huge spike, but this, we should think that we should understand that this was because of the low base, and due to COVID lockdowns in 2020, we see this huge spike. But if you see in the current half, the sales have maintained their growth trajectory, and it's grown by 53%, but the profitability has come down. And as we had discussed earlier, the major impact has been because of the crude oil prices going up. So for this year, we are projecting that sales will grow by 20% and profits will grow by only 5%. The long-term trend, what we see is sales growth will be maintained at 11% and profitability will come back and will grow at around 15% over a longer term period. So if you try to put this in numbers, what it means is currently Asian Paints is doing a revenue of 21,700 crores This is expected to grow to 26,000 crores in 22 and to 1 lakh, more than 1 lakh crores by 2035. Their profits, which is currently at 3,139 crores, is expected to grow to 3,300 crores in 2022 and by 2035 to more than 20,000 crores. So if you see what their turnover is today, almost that much would be their net profits in 2035. And this translates into an EPS of around 213 from 33 today. So there'll be a huge growth potential in this company. And the expected price where we should be buying it at is around 1,200, which at the moment looks pretty difficult. And by 2035, we expect the fair price to be around closer to 7,500. However, if we look at it technically, what we can see is that the correction has started. So all those who do SIP can start accumulating this slowly, this company. And if it comes down to a level of closer to 2,400, it would be a good time to accumulate in lump sum. And we see the range for the next year to be between 2,390 to 3,500. So at 3,500, if you wish, you could book 5% profits. And we suggest that the portfolio allocation can be 2 to 3% in your portfolio. Now, as we have seen, the top line of the company still looks positive. There is still growth. And this is what the management also believes, that the third quarter demand outlook is positive and it is supported by strong consumer sentiments as well as festive season demand. And good monsoon will also help in the rural demand. Plus, there's been an upturn in housing construction as well as industrial demand. So we don't see the top line getting impacted and there is still demand over there. So that's the good thing. However, the raw material inflation looks like it would still persist and might continue into the next quarter and the following quarter. However, the management is taking a series of actions to control this, and one of them would be that further price increases is imminent in certain product categories. So, in a nutshell, the demand is there. We will see top line growth. The bottom line might be muted, but this would be a good chance to start accumulating this wealth creator, which could help you create wealth in the future. That's it from my side. Thank you.